Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So we've broken out of this little pennant triangle pattern right here, broken out to the downside. Lance Roberts was right. Thank you, sir. So just caught it right here on the 50 moving average. It looks to me like it's going to move down again beginning of next week. First level of support is going to be 5,650, and it is down 1.4% for the week. The dollar is exactly flat for the week. My bias is actually up for the first couple of days next week, but then remember we got the Fed cutting interest rates 4 days from now, which will make the dollar weaker. So I expect it to kind of go up, just hit that line right there and then come back down. And the 10-year yield minus the 2-year yield has changed about 29% towards the upside this week. What's interesting about this, okay, so Kevin says, could someone explain to me the analysis of the 10-year minus the 2-year yield? Yes, sir, we can. And let me share my screen here. I'm going to go to the Fed's website. And this is the same chart that we just saw. This is the 10-year yield minus the 2-year yield. So basically, if you think about it, long duration debt should pay more of an interest rate than short duration debt. If you give the government your money for 10 years, they should pay you a higher interest rate than if you give the government your money for 2 years, right? Well, there's periods of time where it's the opposite. You buy a 2-year bond and you actually get paid a higher interest rate than if you buy a 10-year bond. What that means is bond traders are some of the smartest people on the planet, and that means that they see that there is trouble on the horizon and you're probably going to go into a recession. So they don't want to give their money to the government for that long. They just want to have a short duration one. That's why we've been in 1 month treasuries for so long, right? Well, if we go back on history here, these gray bars on the Fed's own website are their admission of a recession. And we can see the pattern forming here, like in the late 80s, inversion of the yield curve, short duration debt is paying more than long duration debt when we get below this black horizontal line. And when we came out of that and spiked up as far as it re-inverting, we have a recession. Same thing here. Dot-com bubble, inversion of the yield curve, short duration debt pays more than long duration debt, spike up, recession. Same thing here. 2007 great financial crisis, interest rates revert, recession. COVID crash, just a hot minute down below that line, quick recession, but then they they didn't invent QE, they did that way back there, but just stimulated the heck out of the economy and got out of it real quick, but just a blip of a recession. What do you think is coming when we've been below this line and the 2-year has been paying more than the 10-year for longer than 2 years? I think we're going to have another gray bar here and we're going to get a recession. So I hope that helps, Kevin. That is the basics of why people pay attention to these yield curves and why I bring it up every single week. If we weren't once we kind of get back into these normal times here, I'll probably start bringing up this chart for a few years because it's just not going to matter. All right, 1 month treasury is down 2.2% for the week. So now 1 month treasuries are only paying 4.64%. So the Fed's got their meeting in 4 days. This should drop out of the sky and get lower here shortly. VGIT, I was talking about last week, maybe doing one more bet right around here on the 200 moving average. Glad I didn't because it dropped down even further. This is a little confusing. I mean, 99% of traders believe that they're going to cut 25 basis points next week or in a few days. So maybe this is already all priced in, and as this chart goes down, yields are going up. But yeah, I don't know. We'll see. We'll see what happens when they cut rates. I would assume that this would go up, but because everyone knows that that's what they're going to do, it's not happening. Christopher, thank you for the continued donations. You're a gentleman and a scholar. Chris says, congrats on your involvement with Rick. I think it's great that you're working with him. We have some exciting times in the metals. I agree, sir. And speak of the devil, Gold hit a new all-time high this week of $2,802. Pretty impressive. I mean, this just keeps happening. Did correct down after Wednesday, corrected down to close the week at 27.49. My bias for next week is actually down. I've been thinking we've been going to have a correction here in gold since like 2,500. It just hasn't happened. It's just been continually proving me wrong. But maybe this week is the week. I think we will get a little correction here, and probably even more so in the mining stocks. Gold divided by the S&P 500 closed the week at 0.48. So we are getting pretty close to that 50% line. I think if we get a few weeks above that 50% line, basically what this is representing is people rotating their money out of the S&P 500 and into gold. And, once that gets above 50%, typically, if it's sustained up there, that's when gold has a real bull run. And CEF is down 1.8% for the week, performing well for physical gold and silver. Got an email from a listener that I got his permission to share. And, let me just read it, and that'll, this was an epiphany for me probably about 3 years ago when I asked Rick about this, and it was for him as well, and I'm hoping somebody will get something out of this. It says, Steve, a few days ago in one of your live chats, you triggered something in my brain. I mentioned that I had moved some more funds into the Sprott CEF fund, this one. You responded something like it being a sort of volatile cash type asset. Your comment got me to analyze my thoughts on fiat currency versus actual resources like gold and silver. Up to this point, I'd always held fiat cash as safe and sort of sacred. But your comment challenged my belief system versus actions taken as it concerns my asset positions. It dawned on me that the actual cash positions I hold almost assuredly diminish in purchasing power given the government's inflationary activities. Stepping back and taking a harder look at the actual world that we live in has helped release me from the heavy dependence on cash. Mentally and emotionally, I'm more freed up to invest in actual resources like gold, silver, uranium, etc. Thank you big time for tossing out that little nugget. You are welcome, sir. And that was an epiphany for me as well. I remember Rick telling me the same thing, and I'm like, wow, he's right. This is cash. It's volatile cash, but it's cash. There's other funds that you can do this as well. PHYS. I mean, like I wrote it from here to here and sold half my position in this physical gold fund, and I put a down payment on the house I'm in today. This is a place to store cash. In times of inflation, it works quite well. In times of deflation, you don't want to be in this, okay? Because it's going to go down. If you can, here's another one, PSLV. This is a Sprott Physical Silver Trust. So these are places that you can store cash, in times of inflation, in times of deflation. You probably don't want to touch them. I hope somebody got something out of that. Another way you can do it is physical gold and silver. My favorite is Miles Franklin, and you guys can email them, info@milesfranklin.com. He's got great deals on precious metals. I like them. They're very, they come delivered to wherever you want. They come in like an, nondescript box. It doesn't look like they're actually holding money. And I like them a lot. Do me a favor and let him know that In It to Win It sent you. He kicks a little bit back to the show. All right, and GDX betting on the miners is down 4.1% for the week. So still kind of trading in this channel right here. It might be a buy point if it gets down here around 38.50 or so when it touches that white line. We shall see. I got the green line drawn here at about $38, and then another buy line down around 36. GDXJ went down 3.8% for the week. So kind of the same thing, just trading in this channel here. I'd like to see, I don't know that I would necessarily buy like on the bottom parts of these channels unless I was doing a quick option for like, long-term trade. I don't think that's it. I'd want to see more of a pretty good washout, because if you catch these back here, look at the RSI, like that one got to 35, that one got to 38, that one got to 55. We want to see it get really sold off like it did back here. We want to see like massive sell-offs before we really like put a good bet in. But as far as I like these little channel Charlie Brown patterns for possibly running options. And Franco-Nevada down 2.9%. Still really like any entry points around this 200-day moving average. Is starting to slope up here. We want to see a pretty massive sell-off here before we make any entries into this, but best gold royalty company on the planet. And wheat and precious metals down 1.5% for the week. Bias for these gold stocks is going to be down because I think the metal is going down next week, so they should be going down as well. And EMX Royalties in suggested that we start including this one in the lineup. Rick, Adrian Day like this one a lot. So let me know what you guys think. I can keep this one in the lineup here. Getting a lot of support right down here around $1.80 or so. I drew the green line at 175, but pretty close. We got the 200, we got the 50 moving average, all coinciding right there. The 50 moves above the 200 right around that point. RSI is still middle of the road, so I'm not quite sure that that's a excellent entry point, but it is maybe a good place to put a starter position around 180, 175. Gold Royalty Corporation down 2.7% for the week. I think this is a deal now. We got to be patient on this one. You know, they have a lot of stuff in the pipeline that's going to be paying coming up in the future. You're basically, you know, buying now for future cash flow. I really like this technical support here around $1.21. So, you know, if you're patient, maybe it'll come back down to there, especially if I'm right about gold getting sold off. I think we got a lot of support around gold, the metal around 25.50 or so. So if we can get down to there, I feel pretty confident that Gold Royalty Corporation will touch back down here to the 120, 121 line. And Origin Royalties is down 13.8% for the week. I'm not really sure what happened here, if anyone knows, but it blew through our little green upward channel trend line right here. I don't think there's anything fundamentally wrong with this company. Usually when you see something like this, I mean, this company's worth 200 million, right? So usually when you see something like this is like one guy selling off his position, you know, or, I mean, we do have their earnings reports coming up at the end of the month, but I believe Anglo Golds, so they have the Silicon Merlin deposit, which Origin Royalties has a 1% royalty on. They have their earnings report coming out next week, so maybe someone there knows something and it got a little less valuable or something. I'm not sure, but either way, I think this is a buy. I don't know that we're going to get many more opportunities like this. I already have a big position in this thing because I started buying this around like 40 cents. But this might make enough for me to place another one, especially if we get continued weakness into the beginning of next week. I'll be buying more. You know, the way I look at this, for 200 million, they already have a cash flowing royalty on Ermitaño, and I think with this royalty that, you know, eventually will pay for Anglo Gold. I think that royalty alone is probably worth what the company's worth, you know, 200 million. So maybe I'm wrong, but I think this is a really, really good deal. And Barrick Gold is down 2.9% for the week, kind of coming into an interesting little double bottom here. I drew the line at 1850. I think that's got a little bit more support than where it is now. So I think you can be patient and probably get a little bit more value out of this. They got their earnings call coming out November 7th, same as Anglo Gold. And Newmont is down 6.5% for the week. We're talking about an option in the rule classroom. I thought that was a pretty good way to play it, but I didn't end up taking one. And the reason is because it looked to me like gold was going to roll over. The hint to me was gold was moving up. I believe it was Tuesday or Wednesday, and the miners were going down, which is a rare scenario. Usually, you know, if gold goes up, the miners go up. If gold goes down, the miners go down. But this one, the physical metal was going up and the miners were going down, which is usually a precursor to let you know that, hey, the physical metal is about to drop. And I saw that, so I didn't put the option in. I may entertain one, actually, if it gets down here to the 200 moving average and we see rising volume. I think that would be a pretty no-brainer, but you know, we'll see what it looks like when it gets there. Agnico Eagle down 1.2% for the week. I moved past the point of concern on this one. So I now, every share that I own of Agnico Eagle is free. I've been getting a lot of questions on this one, and I'm pretty sure it's because a lot of you bought down here at $45 and we got up to, just tapped on the door of 90, which is exactly a double. I see a lot of things like I'm riding this one to the end, and, to each their own. But at some point, you got to pay yourself. I've seen so many people just ride these things up and then just ride them all the way down and just never take any profits, and to each their own. But at some point, you got to pay yourself. At what point is that? For me, it was there. That's where it was for me. So, whatever you want to do, but that's when I did it. And if we get back down here to 73, or maybe we find some support around the 200 moving average, I've got no problem with buying more. I mean, in my opinion, this is the best gold miner on the planet. I'd like to get more, but I'd also like to get some cash going into this very likely recession. We went over both of these companies, Agnico Eagle and Newmont, in the Rule Classroom. If you want to take a deeper dive, then join us over at the Rule Classroom. There is loads of content, and it's absolutely free. We're up to 9,300 members, 9,323 members and counting. So pretty cool. Rick has 2 Q&As coming up with Albert coming up on November 14th and November 28th. This is totally free. You can ask Rick whatever you want. After that, if you're a serious investor, then you can move on over here to the Rule Classroom Plus. Last week, we had Joe Mazumdar do a presentation on analyzing drill holes, and Rick and I did a Q&A. We talked about Newmont, Agnico Eagle, Ecopetrol, Petrobras, Exxon, Fission and Palladium deal, ISO Energy, G Mining Ventures, and a whole bunch of other small market cap companies that are too numerous for me to mention. And this next week, Rick and I will be doing another Q&A in the Rule Classroom Plus on November 7th. And just like always, the episode will be posted so that you can watch it as many times as you want. Rule Classroom Plus is only $30 per month. Links are in the pinned comment below. I hope to see you there. And B2 Gold. Okay, so came right up around this white resistance line, $3.40, $3.50, just lining up with some back resistance right back there. If you want a piece of this company, it's probably cheap enough now, but I would wait for a retracement down here to the $3.15 line or down here to $2.85. If I'm right about the metal itself getting cheaper, then this one will probably hit, possibly even this one down here. And Equinox Gold is down 3.4% for the week. So coming right down here to the rising 200-day moving average. Pretty excited. I almost pulled the trigger here. I got my limit order in for $5.35, which should have hit back here, but I forgot to adjust it. I debated just getting it on Friday at 5:45, closed the week at 5:44. I didn't. If I'm right about gold, this is going to get cheaper. So I'm holding tight at 5:35. We'll see if I live to regret that or not. The Greenstone mine is going slower than we thought, but this company will be cash flowing and paying down debt. So I think in the next 6 to 12 months, I'm probably splitting hairs here, and this is a little ridiculous. I should just buy it. But I think this company will be, probably up into the $7, $8 range in the next 6 to 12 months. And, I'm picking up nickels in front of a steamroller here. G Mining Ventures from K-Squish. She says, thanks, Steve. Appreciate your work. You made me a decent chunk of change in G Mining Ventures, so I'm very happy with this channel. Cheers from a dedicated listener. Well, thank you, sir. You were probably buying back here when we were. Had a nice little bump here, although closed the week slightly down. But I think if you want to get, any entries into this around this level, $7.75, stink bid around $6, although I don't think it will hit. And Robert says, any thoughts on G Mining Ventures? Yes, sir. Okay, so basic overview of this company, Robert. The Gignac family has built 2 previous mines, the builders of this mine. And they, what's awesome about this is you want to try to find, mine builders that are building mines in the same type of terrain, the same type of mine. You don't want to pull, oh, they successfully built a copper mine over in Asia, and now they're trying to build a zinc mine in Brazil. No, you want the same kind of thing, and that's exactly what they did. They built 2 mines at high altitude, high rainfall areas, and then they sold them. And now this mine that they've got, Tocantinzinho, I always mispronounce that, is now producing gold. And up until that point, they were kind of a one-trick pony. They just had this one mine down in Brazil. So they were kind of like Silvercrest in that, it's kind of risky only having one mine. That's why it's nice having like Agnico Eagle or Newmont or Barrick. They got a whole bunch of mines. So if one of them shuts down, it's not devastating. If that one mine shut down, it would be devastating to this company, right? Well, then along comes Reunion, and G Mining buys Reunion's Oko West project. So this thing is all drilled out. They just got a preliminary economic assessment for Oko West that looks good. So that one's in the works. And, so now there's a forecast for this one, right? You can see how it's going to grow. Whenever you have one of these mines, it's literally a depleting asset. It's a burning match, because the more time that goes on, the less that project is worth, right? But we're trying to catch this as a rising share price. So next is Oko West. What's after Oko West? Well, Central Gold. They acquired Central Gold from BHP for the cost of a 1% royalty on the first 1,000,000 ounces that comes out of the ground, and 1.5% royalty for every ounce after that. They've got 1.7 million ounces indicated, and there's probably going to be a lot more. So this is basically a story by a successful family that has built 3 mines now and has 2 more in the works. And I think as long as we're in a gold bull market, I think that this company is going to do very well. I think you basically want to buy on weakness and ride this out as long as we have a gold bull market. And so I think the first entry point, if you have nothing, is $7.75. And then hopefully you got a stink bid to back up the truck down here at $6, assuming nothing happens fundamentally with this company. All righty, Robert, hope that helps. And Rio 2 with Alex Black, we got the financing secured. They're starting construction. Stink bids down here for 40 cents and 35. Those are probably pipe dreams. Silver is down 3.25% for the week. I said last week I thought that we're probably not going to see 35 again for at least a month, and that's starting to get reinforced here. If you want to put on a limit order here on silver as far as getting some physical metal, maybe from Andy Sheckman or on like PSLV or something like that, I think the level to watch here is 32. And then also, I like the level 30 quite a bit. I think we're going to have some weakness here. If I'm right and gold goes down, then silver's going to go down even more. And I think our first level here is going to be 32, and then after that, 30. And the gold to silver ratio is up 3.2% for the week. So we went from 82 to 1. Now we're at 84 ounces of silver to 1 ounce of gold. So gold is outperforming silver. That's what that means when this chart's going up. I drew a little Fibonacci here. I don't really know how relevant that is. I can probably remove it. SIL is down 5.7% for the week. So just tapped on that little resistance line and then came back down. I don't really see any entries into this at all. We want to see the RSI come back down. But the first level I'll be watching here is 35, and then after that, 31.50. SILJ is down 5.9% for the week. So hit our $15 mark and drop back down. I'll be looking to make some entries here around $11.50. Pan American Silver down 7% for the week. I'll be looking to add here on this rising 200-day moving average. That would be around $19. Fortuna Silver Mines is down 3.5% for the week. Just same kind of thing. Watch this rising 200-day moving average. Got a lot of support around $4.25. And SILV, Silvercrest Metals, down 10% for the week. So I guess the news of Core Mining and the merger is kind of worn off, along with silver selling off a couple of bucks, down around $9.75. If you want to make an entry on this, I would look to add here around this rising 200-day moving average. And Endeavor Silver is down 9.5% for the week. Super leveraged to silver, just like Silvercrest is. I would say, you know, if you're looking for, I mean, this is going to be super volatile. So if silver gets down to $30, this thing is going to get smashed. But, you know, I'd be looking around here around the $4 level, and then again around $3, kind of around this rising 200-day moving average. But we got pretty stretched technicals here. You know, you're going to want to wait for the RSI to get sold off a little. Leo, thank you for the YouTube donation. I appreciate it, sir. And Copper, paging Dr. Copper, exactly flat for the week. So not up, not down. I thought last week this was going to be sideways or down. Looks like that's playing out. I kind of think the same for this week, you know, probably sideways, maybe slightly up. It looks like it's obeying this 50-day moving average right here. But the one line that I really don't want to see it break is this white upward channel trend line. Although if Lobo Tigre is right, it probably will. COPX is down 1.7% for the week. Just bounced right on that 200-day moving average, then shot up. I'd be looking for, if you don't have any position in this, I'd be looking first level at 42, and then after that at 39. COPJ down 1.4% for the week. Same kind of thing, same kind of pattern, just a little bit of an exaggeration of it, and a much smaller market cap here in this ETF. But yeah, first entry around 21, and then after that 1950. And Freeport is down 2.2% for the week. So if you're following along here from last week, your first limit order just hit at around 45.75. And then next one I think would be a pretty nice entry point is around $40. Arizona Metals fell out of bed and then jumped up a little bit and then fell back out of bed. Down 3.3% for the week. I heard back from Arizona Metals. Apparently Duncan's under the weather, but he wants to do the interview. Hopefully he's feeling better. Our thoughts go out to you, sir. Get well soon. Munduro Capital down 0.5% for the week. If you want a piece of this company, highly leveraged copper, very small market cap, limit orders only. I think it's worth 14 or 15 million. I'd say the first limit order is at 13 cents. And then personally, I got a stink bid down here at 9 cents. If we get a sell-off in copper from a recession, this should hit for sure. And uranium is down 2.9% for the week. So we are still around the $80 mark, although it closed the week at 78.35. I'm not moving this white line. I'm sticking strong. We'll see how I'm either going to look with egg on my face or not, but I'm not worried about that at all. Uranium divided by gold. So uranium's still really cheap compared to gold. I think it's a pretty good time if you want to sell something like PHYS and swap it over for SRUUF. I don't think that's a bad trade at all. Yeah, very cheap in relation to gold. The Sprott Physical Uranium Trust is down 5.7% for the week, still 66.1 million pounds, same as last week. Now it's trading at a 7.15% discount. So not quite the discount that we're looking for. I'd like to see this sell off a little bit more. The reason it didn't get quite the discount is because the price of uranium fell a couple of bucks. So if uranium holds right here, the spot price, and the Sprott Physical Uranium Trust continues to go down, that would be awesome. That would line up and probably give us the 12 to 14 to 16% discount that we're looking for. And then we can repeat the Sprott, the SPUT secret money hack once again. Cameco down 2.4% for the week. You know, these are just the orders that the levels that I see, $47 and then 41. Kazatomprom down 1.3% for the week, still trading at the bottom end of this box. You know, I think if you want a piece of this company, any limit orders around 37.25 will probably work out well. URNM down 6.4% for the week. We want to watch as this gets sold off. I think that I think the spot price of uranium will probably stay the same, but I think the equities are going to continue to sell off a little bit. All these charts look pretty bearish to me. So I expect to get a little bit more weakness in these equities, and maybe we'll get lucky and it'll get down around this green line and we can get some more. URNJ is down 7.6% for the week. Same as URNM. Chart looks basically the same, but we want to see this RSI get really sold off, get down here into the low 30s, maybe high 20s, and then we can rinse and repeat. URNM divided by the metal itself, the miners underperformed by 3.6%. URNJ divided by Kazatomprom, Cameco, and the Sprott Physical Uranium Trust down 1.5% for the week. So the juniors underperformed the majors and Sput. UROY down 6.6% for the week. We got support around $2.50. If it gets down to this green line of like 190, I will be buying more. But a lot of confluence of support right here around this $2.50. We're about to get a golden cross here in the in UROY. So the 50-day moving average punching through the 200-day moving average. But I'm going to want to see this along with rising volume, and that might actually cause me to take an option on this. We'll see. And some people watch the Qs. We watch the Us down 9.2% for the week. So yeah, still want to see this fall down a little bit. Best buys would be $4.30. And UEC is down 5.7% for the week. So first level of support I see here is $6.25, and then the other one down here at $4.25. And Clifton says, BWX Technologies. Clifton, thank you for the donation. So I looked these up real quick. They apparently make nuclear reactors for the Navy. So in their submarines and battleships and stuff, that's kind of cool. So I see where your head's at with this one. Let me zoom out here on the weekly a bit. Kind of looking a bit like the NVIDIA chart. We got some pretty stretched technicals. I wouldn't be making any entries onto this one. They do have pretty low earnings per share, which is a little concerning. But if your heart is set on this one, I would set your first limit order around here, around 105. That should get the technicals down quite a bit. And then probably another one down here around 90 bucks. All righty, I hope that helps, Clifton. And oil, WTI is down 3.2% for the week. So kind of hit, we'll call that a triple bottom, 1, 2, and 3, and then bounced up a little bit. Brent is kind of the same pattern, but it broke through this trend line right here, down 3.5% for the week. And then gold divided by crude oil. So it now takes 39.5 barrels of oil to buy 1 ounce of gold. So gold outperformed by 3.1% for the week. And XLE, our favorite oil ETF, is down 1.9% for the week. Looks like it's just hovering above this 400-day moving average. Still like a limit order down here of $83 and then a stink bid of $79.75. XOM is down 3.8% for the week. So had a pretty bearish bar right there. So beginners just got their first limit order at 120. I think your second limit order should be here at 114, and then your final one down here at 109. So I think 114 will probably get hit either tomorrow or the next day, and that will bounce right off that 200 moving average, getting pretty low RSI. Got it at 35. So, if you guys want another position in ExxonMobil, I think we're approaching a pretty darn good time. And Ivan says, what indicators are you using on TradingView? Well, Ivan, I'll put a link up here so you can check it out. I did a full tutorial of how I set up TradingView and exactly what buttons I click to set it up. I think it's 18 or 20 minutes long. It's pretty self-explanatory. You can literally watch and pause and click along and check it out and set it up exactly how I have it if you care. I know you guys are using this software because you're using the link, so thank you very much. I love this software. I don't know how I would cherry pick these bottoms if it wasn't for this software. I just wouldn't be able to do it. Thank you guys for using that link. It doesn't cost you any extra. And actually, I found out recently it gives you a little discount if you use that link. And you could try it out free for 30 days. And if you don't like it, well, then it was free. All right, Chevron had an interesting bar on Friday. So it shot up. Looks like they had good earnings report to the upside. Shot up and then came right back down. So it looks like it got a little overbought and then settled right on the 200-day moving average. Looking like it's probably going to go down on Monday and Tuesday. If we go to the weekly here, we can see we got this rising 200 weekly moving average. So I think any entries around that 200 weekly moving average would be good. I said the same thing last week about Occidental, but that one did not hold, down 3.5% for the week. So it actually fell below this rising 200 weekly moving average. Although if we go to the daily here, it set up a pretty interesting, we can call that a triple bottom right there. Does look like it's going to go down though. So you might be able to get it a little bit cheaper. And Blackstone Minerals down 1/3% for the week. So we got their dividend coming up. It's going to be November 8th. So we might have another option set up. So we can see, we've run some options back here in the past on these dividends, timing them with it, and we might get a timing on that. So that'll be next Friday. We'll see how that works out. Freehold down 2.8% for the week. Great dividend, 9 cents a share per month, coming right into this first buy zone right here at $13.50, and then stink bid down at 13. I pulled this one up because of Elliott Gue, down 4.7% for the week. Schlumberger basically said that this is the one we're going to want to move into towards the later cycle of the oil bull run. So I don't think we're going to want to get in this one just yet. I think, but I want to put it on your guys' radar that this is one that we're going to want to look at, probably in a couple of years. Natural gas up 4% for the week. My bias for nat gas is actually going to be down next week. Devon Energy, so this one's pretty exciting. So I had a limit order in down here for $38. It only partially filled. So it was just down at 38 for a hot minute. And then I think about half the order filled. So I still have the rest of the order there at $38. Hopefully the rest of it will fill next week. I think it will. If I'm right about natural gas and the direction of this chart, $38 for a limit order will be a steal. Woodside Energy is down 3.1% for the week. Pretty textbook double bottom here. Kind of looks like Devon. But, if you guys want some more Woodside, I think $15.50 is the level. Birchcliff Energy is, this one's getting excited. And exactly what I thought would happen is happening. It's starting to get sold off. We want to accumulate this one over the next year or so and hope that Justin Trudeau does not get reelected and his counterpart does, and then this one should do quite well. So accumulating this over the next year or so. RSI is at 28. I may up this a tiny bit, although it looks like it's going to keep going down. So I got my limit order in here at $3.55. And Pado almost hit the limit order. Hit right on the 200-day moving average, but it looks like it's going to blow through that. Got the limit order in at $10.65. Stink bid down here at $9.75. But I think this one will probably hit on Monday or Tuesday. And Clifton, New Fortress Energy. Okay, so I see what you're seeing here, Clifton. Just in the future, let's keep company reviews to one company per donation. I like to keep these Monday Market Moves episodes at like 45 minutes, or they just get too long. But New Fortress Energy, I definitely see what you're seeing here. Okay, so we got a giant 4-year double bottom. Unfortunately, this company has an S-ton of debt, and just looking at some quick numbers in the financials, and I see what you're seeing on the charts here, but I wouldn't touch this one. I really wouldn't. Maybe I'm wrong. Maybe fundamentals don't matter when you have a double bottom like that, but Yeah, I don't I don't see anything coming with this one. I would fade this one. So hope that one helps, Clifton. Coal. All right, we got thermal coal here. Is what is it? Closed the week at 144. Met coal closed the week at 206, and our favorite coal ETF is let's see, what is it? Up 1.5% for the week. Still, well, we actually upped the assets under management by 200,000 since last week. 10.7 million assets under management, still the same 470,000 shares. I really think we're going to get weaker on this. I got the limit order down here for 20 bucks. That might be a little bit too cheap. Maybe I should have it around 22. I don't think 22 is bad at all. But I really like the outlook for coal over the next, half a decade. And I think this is one of the easiest beta ways to play it. Glencore up 0.9% for the week. I got two limit orders in down here, just two separate accounts, but the same amount, $9.40. AMR still got the limit order in here for 186 a share. Looking bearish for next week. I think we're going to come back down. Had bad earnings call, so that's good for the share price coming down. And Peabody had a great earnings call, and they shot up. So the little secret money hack for BTU is kind of out right now. It's up 8.5% for the week. And platinum is down 3.3% for the week. So close the week at 1,000 and we'll call it $3. 960 has a lot of support, and then 900 has even more. So we'll see what irons out with these PGM metals. If Lobo Tigre is right, there's going to be more weakness, and we'll have a better chance to get into them. PPLT down 3.1% for the week. I think an $85 starter position and then an $80 stink bid is prudent. And Palladium is down 7.8% for the week. So that little run up that we had in Palladium has come back down. Close the week at $1,108. I think a stink bid around 900 bucks is good. And PALL, same kind of thing. That would equate to about $80 on the PALL fund. The Sprott Physical Platinum and Palladium Trust down 4.2% for the week. So this is about half palladium, half platinum. And I believe it's Donna. DK had a question. Hi, Steve. Thanks for the great content as always. Last week, about 41 minutes in, you're talking about platinum and palladium, and then you pulled up a comparison chart, and that's where I got lost. You talked about making a boatload of money on something. Was it palladium? If so, what to buy and what price? Thanks again. Okay, this is what I was pulling up here, Donna. This is platinum divided by gold. Okay, so if I go to the monthly chart here, we can take a look. This goes back into the 80s. And this is basically saying how many ounces of platinum it takes to buy 1 ounce of gold. And we can see right back here, back in 2015, it was 1-to-1. So you could trade 1 ounce of platinum for 1 ounce of gold. Back here, it was 1.5. And back here for quite a while, it was 2 ounces of platinum would get you 1 ounce of gold, right? Well, I'm sorry, 2 ounces of gold would get you 1 ounce of platinum. Well, we're all the way down here at like 0.36. Okay, so that basically means that it would take 3 ounces of platinum to get 1 ounce of gold. Well, there's times in history where it's the opposite, right? I mean, up here it almost reached 2.5. So I think if you trade, like this is just a thought experiment here, but if you trade some of your silver for platinum, I think that eventually this ratio is going to reverse, right? Even if it gets up to 1 or just a little north of that, that's a 3x move from the point that we're at now. And if we go to the platinum divided by silver, it's the same kind of thing. I mean, when was the last time you could trade 30 ounces of silver for 1 ounce of platinum? The answer is pretty much never. Right? It is really, really cheap when you look at those ratios between the three metals, between gold, silver, and platinum. And so I think if you were to trade 30 ounces of silver for 1 ounce of platinum right now, sometime in the future. I don't know when that's going to be, but I think eventually that ratio will get up to like 60 to 1. So think of it this way. If you trade 30 ounces of silver right now for 1 ounce of platinum, you hang on to that platinum for the next 2 to 5 years, and the ratio gets back to like 90 to 1. Now what you can do is you can take that 1 ounce of platinum and get 90 ounces of silver. Does that make sense? Okay, hope that helps. So the one that I would probably do this, if you want to play it, is I would do the PPLT here. I would simply maybe sell some of your PSLV, which is your physical, air quotes here, physical stock market silver, buy the PPLT, hang on to it for a while, and then after a while, you can trade that back, right? Or if you have physical coins or bars of silver, you can trade those for ounces of platinum and vice versa. All right. Okay, nickel is down 1.6% for the week. Can't help but notice this triple bottom right here in nickel. So I think we're pretty close. I think this is about the floor in nickel. I mean, if we hit a recession, these little green lines here aren't going to mean squat. But I think we're pretty close to a bottom here in nickel. And if you want to play this on the stock market, NIKL is the Sprott Nickel Miners ETF, and check this out. It's just hitting right in a retracement right here. So if you want a position in this, I think this is a pretty neat time to get it. Yeah. Super leveraged on that would be Centaurus Metals, up 4.5% for the week. Very small market cap company, but interviewed the CEO, Darren Gordon. I like what these guys are doing a lot, and I think that this company is going to absolutely kill it if they can get their mine built. But as far as entries under this, I would say a stink bid down here at 21 cents, and then maybe a limit order down here around 27, 28 cents is probably going to hit. And iron ore down 1.7% for the week. Close the week at 102.50. BHP down 0.9% for the week, so just about touching on our idiot-proof $55 level. Stink bids at $52. And Rio Tinto is up 0.1% for the week. Got support down here at 60. Resistance on this downward channel trend line is going to be, by the time it got there, it'd probably be around $70. And our favorite metals and mining ETF pick down 0.2% for the week. So if you had your limit order in there for $40, it hit on Thursday. Congratulations. You're in. Also kind of lines up with an interesting retracement. You guys can probably already see this now without me drawing it, but boom, hit right there on the 50% mark. Next limit order down there, I would put at 36.25 for a stink bid. And Nutrien fertilizer up 1% for the week. I don't really see any discernible patterns here other than a limit order down at $45. And Bitcoin, as of this moment, recording on Saturday, is up 2.2% for the week. So this one is kind of exciting here. So I thought that we were going to continue to get like lower highs, and that got negated here over the last couple of weeks. So maybe what this pattern actually was a bull flag, and we finally broken out to the upside of this. So I would love to see, as the economy goes into a recession and inflation continues to go up, I would love to see Bitcoin just fly off the handle and go to the moon. And I would love to see governments freak out. But maybe that'll happen. I don't know. I hope so. All righty. Well, I hope you guys got something out of that. I really hope to see you guys out at the New Orleans Investment Conference. There's a link down in the notes below. I'm going to be out there with the missus. We're going to be interviewing a bunch of companies, and I would love to shake hands with the guys, meet you face to face. There's also a virtual way that you can attend that. So if you can't make it in person, then you can always do it virtually. Thank you for always being here. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.